doing this podcast is learning about all the different ways, all the different paths to one's financial goals. I love reading books about entrepreneurship and investing for that reason. However, most of the authors I'll never get to speak to, never get to meet. Hence, I'm grateful for my friendships with my mentors like Dominic Caradza for real estate and Derek Foster for stocks. By having expert mentors, they're great for distilling down all the information that they're reading. For example, Derek Foster, being retired and with his passion for stocks, has the time to read quarterly and annual reports of companies he wants to invest in, including Warren Buffett, to get an understanding of what the greatest business leaders out there are seeing in the economy and the market, and for opportunity, of course, and also, when to cut losses. What's even better is Derek's kind to share what he's buying and selling with me because we're friends. At least I pretend we're friends. I like to think we're friends. Though Warren Buffett moves the market anytime there's an announcement, anytime there's information available on when he's entered a company such as like Occidental Oil, he really moves the market. Derek doesn't move the market like that. But however, Derek is positive on the year in terms of his investment portfolio year to date, while being 60% cash. Compare that to the overall stock market, which is down close to around 20% year to date in 2022. Derek's beating me as well. And my policy is to learn from winners with track history who have achieved what I want. In this case, I want financial freedom and, it'd be nice to work a little less. That's the same reason why we asked Derek to speak at the Wealth Hacker Conference, as Cherry and I are merely architects. We plan, design, and oversee our own investments for our clients. Derek, however, is an expert in the area of stocks, as he is Canada's youngest retiree for almost 20 years and is our stock hacking expert. Our conference also features experts in insurance, cryptocurrency, blockchain. That's one category. Real estate, cash flow management, specific to accounting for real estate, how to access the maximum number of mortgages for your income properties, all the really important things that any sort of professional investor needs. Side hustling investors as well. Anything a professional investor wants to know, side hustlers should likely want to know it as well. All of this all in one day. I can't recommend enough that you bring your team with you. Your team, as in like your investment partner, typically your spouse or your significant other, any friends and family who've shown interest in investing. That can include any adult children, anyone who's interested in getting ahead, who's open-minded and wants to get ahead in life. If you know children, if you know the children's game, Broken Telephone, it's best to receive information directly from the source, such as our expert speakers. If you've been around for a while, then you know the importance of community as well, because if you want to go far in any endeavor, you need a community to do it with you. And it takes the whole saying, it takes a village to raise a child. It takes a village to raise a successful investor as well, in my experience. For you 17 listeners, we have a special discount code, which is TRUTH. It's a 5-letter word for the best price available. But please do not delay, as the price will only go up between now and to the event on Saturday, November 12th, Toronto Congress Centre next to Pearson Airport. That's a Saturday, all day, roughly, expect to show up before 9, expect to leave around 5:30ish. Of course, VIPs will stay a little bit later for the meet and greet with our keynote speaker. And this is live and in person only. There will be no option to do this virtually. Again, the discount code is TRUTH, 5-letter word. And also in the show notes, I've included a link because in my experience, a lot of people have trouble finding where to input the discount code. So I've included a link that goes directly to the discounted tickets for you 17 listeners. It's all in the show notes. So if you're on my email list, you get the show notes. And also, if you just go to our website, truthaboutrelestateinvesting.ca, you go to this episode, you'll see the link there as well, including all the show notes for this episode, including how to reach out to our guests. So on to this week's show. Full disclosure, Tim Collins is one of our longest time clients, hence he's bought and held real estate investment properties for several years in order to get rich slowly. He's also taken our Stock Hacker Academy courses. He switched careers a couple times from when I first met him, somewhere around 2012-ish. He was a high-paid tech executive working downtown Toronto, living in Orangeville, so you can understand it's a bit of a commute. He's now pivoted, so he's switched careers a couple times. He's now a real estate agent. He's also moved his family from Orangeville, Ontario to now Nanaimo, BC, which is on Vancouver Island. It's a short ferry away from Vancouver, the city of Vancouver, for the warmer weather and better view of the ocean. Yeah, better view. There's no view from Orangeville, Ontario. Tim is obviously open-minded. He's successful. He wants more in life, more out of life, and now he's financially free to do whatever he wants. He has the option to retire even. He's also a successful realtor, so he still likes doing that. So technically he's not retired, but he has the option to retire. Absolutely, thanks to his now 10,000 plus passive dividend income each month. More than $10,000 each month of dividend income. I'm not an accountant, but dividend income is generally more tax optimized than, actually it's usually the most tax optimized source of income, typically. Tim's mental health is likely better than most of investors these days as well. Tim has exited all his real estate, so interest rates mean pretty much nothing to him. For his own investment portfolio. From my experience working with investors every day, many of you want passive cash flow. Hence, I'm excited to bring you this episode to learn how Tim escaped the 9-to-5 rat race, those golden handcuffs, via building wealth in real estate, then pivoting to stocks for greater yields and passivity. We're all on this journey of learning together, and what better way to learn than from folks who have what we want. Quick announcement regarding Stock Hacker Academy. We've completely revamped the course to make it more comprehensive and added numerous modules to aid those who are new to the stock market. So this is more beginner friendly than ever. Plus we've added several value adds that we will announce at the Wealth Hacker Conference. As always, we believe in and practice continuous improvement. I am beyond excited to share with our community the absolute best version of our beginner program at the lowest possible price that anyone will ever see. And it's only available after we announce it at the Wealth Hacker Conference. Just another bonus for those of you in attendance. So without further ado, I bring you Tim Collins. Please enjoy the show. Hi Tim, long time no talk. What's keeping you busy these days?
Well, my kids are back in school, which is brilliant news. Everybody's excited about that happening. But yeah, just the usual, looking after the family, helping people buy and sell houses, as you know, in the old real estate game. Although things have slowed down a little bit, there's always lots to do there. Yeah, reading, learning, living my life.
Amazing. Okay, I know you don't feel like you said a lot, but I feel there's a lot to unpack there. Let's start off with where you live. What city do you live in? You are Canadian, even though you don't sound like the average Canadian.
Yes, yeah, that's a longer story, but grew up in England. Currently living in Canada. I was born in Canada, but only for the first year of my life, and then grew up in England, and then came back in my early 20s. But yeah, now I live on Vancouver Island in a place called Nanaimo, which I ended up here through attending a real estate investing course years ago. Mm-hmm. At the time I was living in the GTA, and I just thought, this is lifestyle wise for me at the time just seemed like a great move. And I'm still loving it. 8 years later or 9 years later, mm-hmm. however long that is.
And Nanaimo is quite affordable, is it not?
It is, yeah, or it was. It was when I came. Yeah, I think in terms of national average standards, people often think of Vancouver as being the most expensive real estate in Canada, which is probably still true. But Vancouver Island, less business here and less sort of going on economy-wise, tends to be a little bit cheaper. Mm-hmm. I don't know what our average house price is at the moment, 900,000 maybe. But yeah, you can still get a nice single family home, often with views of the ocean, because much of Nanaimo is on a hill, kind of looking at the piece of ocean between us and the mainland. So yeah, I still think there's affordable options, and with the recent pullback in real estate prices, I think there's opportunities for people to mm-hmm. to get involved once again. Yeah.
How far do you think you guys are off the peak?
Maybe 15%. Yeah, I think pretty typical numbers. I would say, I don't know if I'm sort of biased because I'm a realtor and I live here, but there does tend to be a constant influx of interest in Vancouver Island, because when people retire from the East Coast or Alberta, for instance, and they want to escape, the frigid winters, a lot of people look at Vancouver Island and say, right, I want to live there because the winters
Right.
are obviously a bit less harsh, and summers are nice, and so
You're being modest. I
the
imagine that you have some
Hawaii
of
of
the best
Canada.
Yeah, exactly. I think that's probably the right analogy. Is you likely have the best weather in Canada.
I think so, yeah. I mean, some people think that it rains too much in the winter for them, but again, I grew up in England, so for me, this is pretty close to that. Where I'm currently living, I'm very fortunate in that I can walk probably about 300 meters, some of which is down some steps, and then I'm on the beach, and the beach is, because there's about 300 steps down to the beach. It's absolutely deserted, but you could be in a different country. It's absolutely stunning to go there and go for a swim every day in the summer. We go down there, so
Amazing. And then where
yeah.
can folks reach out to you? Should they be interested in investing or moving to Nanaimo?
Yeah, you can just, on Facebook and Instagram, it's just Tim JP Collins. Or if you want to find out more or just chat, my email address is just tim@timcollins.ca.
Fantastic. And folks, I'll have Tim's social media coordinates in the show notes. Some people are driving. Well, you're a successful podcaster yourself. People aren't
done a couple
typically
of podcasts,
listening and taking notes. They're usually this is their second thing that they're doing while they're listening. Our 17 listeners.
I mean, interestingly, part of the origin story for living here is that I used to live in Orangeville, and I used to work at Young and the 401, and I would drive that road every day down along Highway 9, I think it is, down the 400, along the 401.
An hour each way?
Yeah, like an hour and a half each way, probably. And in the winter, even more. And I sat there one day in the car and got the calculator out on my phone. And I always justified it by like, oh, I'm listening to audiobooks and podcasts. I'm learning so much. But I got the calculator on my phone. And I was like, right, 3 hours a day, 5 days a week, 52 weeks a year. And it was a 20-year career or something. And it ended up being years of my life. So I can't do this anymore. That was a big part of the reason for the move. Now, when I first came here, I was commuting about 10 minutes, and now I work from home. So even better.
So what was your day like then? What time did you leave the house? And did you see your kids in the morning?
Yeah, I didn't see my kids when they were young. So I would leave at probably 6, and I would get home at 6 or 7 at night. So a good 12 hours away from home. My company I worked for at the time were completely against remote work. And my wife famously reminds me to this day, there was days where it was snowing outside in Orangeville. If you know, that area is snow belt, particularly bad.
Yeah, you have ski hills in Orangeville.
Yeah, I backed onto the ski hill in Hockley Valley. So I bought a Subaru with winter tires, which means you can go pretty much anywhere. But I would go to work when these days I wouldn't go to the end of the road, and I would drive that journey in horrific blizzards and winter conditions, and just out of the obligation I have to be there because they really want me in the office. And then you get to the office and you sit around and drink coffee all day and talk about non-relevant things. But yeah, that was the life, right? You just felt like you had to be there, and it's all part of the journey, so to speak. But I can't today. There's no way I would want to be in that situation again.
Right. And around that time is when you got really motivated around real estate investing. Am I wrong? All right.
Yeah, that's right. I mean, it's all part of that story of like dissatisfaction with that commute, and I started having some issues with anxiety around that time, and just being mega stressed out with work and the travel, and ultimately I put myself in some handcuffs in terms of I had this house, my kids were in private school, I got a couple of cars, I needed that salary to sustain my life, and I started thinking, we're going to talk about other ways which I've achieved it now, but back then I was thinking, right, real estate, I'm going to buy a house, I'll rent it out, and through that rental income I'll be able to generate some money to replace my salary. So yeah, that's when I think I literally went on Google one day and typed in real estate investing, and ended up finding Julie Broad, who's a mutual friend of ours. She happens to be in Nanaimo. That's why I moved to Nanaimo, because I came out here and fell in love with it. But yeah, I got super motivated to to take action and control my own destiny and just say, right, I'm going to learn as much as I can about this. At that time, I found you and your meetup group.
Julie connected us.
Yeah. Yeah. So she
Thank you, Julie.
connected. Yeah. But yeah, she connected us. I started coming to your Saturday morning sessions in Oakville, and that's kind of how that was, how it all got rolling,
Mm-hmm. And then you bought a couple houses.
Bought some houses, yeah.
I think it's funny. You just bought a couple houses. Just bought some houses.
I remember the first tour we went on. I think it was. I remember it in my head. It was West 4th Street near Mohawk College. We looked at this house, and I think I paid $270 for it at the
mercy.
time. $270,000. I said to her, and all I said to you was like, "Would you do this?" And you're like, "Yeah, it seems like a good opportunity. It's close to the college," and we kind of talked about it. And so that was the first one of many that I got involved in.
All right. Sorry, to just pause you right there. I don't know if you know, but I actually tried to buy it from the person you sold it from afterwards.
Oh, really?
Yeah. And in hindsight, I regret not buying it from you because I was actually trying to own that section, the 4 houses, those 4 houses at the corner.
Yeah.
Yeah. I kind of, but that's funny. You asked me, would I buy it? Like, I wish I owned it now.
Yeah.
Because I was trying to play Monopoly and control a quarter.
Yeah.
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 All right, continue.
Yeah, but I mean, it sounds very romanticized in hindsight. But at the time, I got loads of stories about, student nightmares from hell where I'd go in and they wouldn't have taken the garbage out for a couple of weeks, and cockroaches and exterminators and people not paying rent and drugs and bottles everywhere. And it was just, it's a lot of work. And at the time, when I was knee deep in, with rubber gloves on, picking up other people's garbage and pulling hair out of drains and all those terrible things, I just thought, I got to do this. I got to work hard. I've got to get it done. And so I would go around my Hamilton houses and be my own property manager for a while. And then at some point during that evolution, I realized I can't keep buying houses and trying to find joint venture partners and do all the property management, and so started outsourcing elements of it to other people. But yeah, that was in terms of capital growth. Buying real estate was how I did that. There's no secret to that, and that still probably remains the best way, or one of the best ways to make money over time. It's the kind of the get rich slow scheme, right? So I had another place I bought in Orangeville in probably 2010. Paid around $200,000 for that. Sold that for $650 recently. And that was like a semi-detached house, and went in and same thing, like ripped the carpets out ourselves, painted the walls, put in flooring, and did whatever we could to rent it out and maintain it. And yeah, I mean, lots of people listening to your podcast know how this stuff works. And yeah, it's been a sort of great journey of building those things up and then offloading them as well,
So Tim, really quick update on the student rental market.
Mm-hmm.
A lot of landlords got out during the pandemic.
Yeah.
So there's like no supply.
Right.
So bedrooms at McMaster for a mediocre house, are renting for $800 a room.
Very nice.
Mohawk, I don't know the numbers, but they have this exact same issue.
Yeah.
There's nothing to rent.
Mm-hmm.
And already there's nothing to rent, let alone student rentals. So rents have gone through the roof.
Yeah.
So rents are probably up around 30%.
Yeah. Which makes sense, although those landlords probably had to suffer through 2 years of nothing.
Oh, yeah.
To get there.
So it's payback time.
Yeah. Yeah.
So yeah, crazy, eh? Crazy how the
Yeah.
pendulum swings.
It is funny how it changes. I mean, I'm sure there's people who bought houses 20 years ago and they're just sitting on them and, they don't need it yet. But, a lot of the bold moves I've made in my life have been as a result of conversations with my wife. She normally gets there before me, mentally, where she's like, just go for it. We'll work it out. And, part of that was when we lived in Ontario and I bought some of these student rentals houses. I started doing joint ventures with people where they would, qualify for the mortgage and I would take care of the investment. And all of a sudden I decided we wanted to move to the West Coast. I said, we can't. I said, we can't move because I got, at that point, 10 or 12 houses, some of them with other people. We can't possibly leave all this stuff behind. And anyway, Steph, my wife, is like, well, just sell them, or tell the people you're moving and see if they're okay with you coming back, once in a while to check on them, and manage them remotely through a property manager. And so I say that because I find I speak to a lot of people about their lives, and they often say, well, I can't move because of X. And X might be a business that you're running, or family that you have, or whatever it is. And if those things are making you happy, then, power to you, stay where you are. But I didn't let that hold me back. And some of the people said, yeah, I don't mind you having a property manager and dialing it in, so to speak. And some people decided they didn't want to be in those investments anymore. So luckily, thank goodness that we were in a bull market housing wise during that time, and prices had gone up. We sold them. They made a bit of money, not as much as we'd expected if we'd held on to it. But yeah, that was what I wanted to do with my life. And so we just made the move and got on with it.
Can you share about your joint venture experience? Positive, negative, loved
Yeah.
it, hated it,
Yeah, I
in
had some
between?
great ones, had some more challenging ones. I would say that ultimately, it was beneficial to kind of get me where I am today. It's another one of those things where it was, I studied it a lot in terms of how do I meet people, how do I start conversations around real estate, about investing in real estate, learning my market, becoming an expert in the area. Um, yeah, I think like many things in business, it's just setting out very strong expectations at the start. This is my responsibilities. Those are your responsibilities, and you know, this is how we're gonna work it. One of my joint ventures who I did a few deals with was very disappointed when I said, well, he said you can move, no problem. And then eventually, when I said I want to sell, he said, well, I wanted to keep it for even longer. I said, well, great, you're welcome to buy me out, but it's time to move on. So again, clear plans in terms of exit, how do you move on, etc. I think it can be very beneficial, but it's not something done lightly. You need to understand, you need to know your contract inside out, you need to know your market, you need to know what you're up to and what you do if things go wrong, because often they will, you know. So
So for someone who's getting into joint ventures, for example, do you have like maybe like three tips? Like you mentioned, know your market. How would someone
mhm.
demonstrate they know their market or their strategy, for example?
Yeah, I think, if your market is where you live, then it's probably easier because you can, know what's going on. In my case, my market was, well, twofold. It was Hamilton and slash St. Catharines slash Welland, but it was also student rentals as a niche within that. So then you can get very specific around what are the rents at the moment, and what's happening after the pandemic with landlords and our students still renting houses, and start to have a story around that whole area. And then you're just going to know more than other people. Talk to the property managers, talk to the realtors, build up your knowledge, and off you go. The other thing I would say is don't do joint ventures with family or friends, because it's some people are able to do that, but as soon as you sign a contract, your relationship changes from a friendly one or a family one to a business one, and people are going to be saying, where's the money if things go wrong, or if there's a roof needs to be replaced and you don't have money in the bank and you have to split the capital expenditure, difficult conversations will
Right.
arise. So if you can find people who are known to you, but they're not like in your close circle of friends or family, then that's often good. A lot of the time people start with friends and family because it's obviously easier to ask, hey dad, do you want to do this thing with me? Great, but I wouldn't do it with my dad because I love him, but it would change our relationship. And
Hmm.
he'd be saying,
Hmm.
how's the house going?
Hmm.
Actually, we need a new dishwasher. Oh dear, that's gonna cut into the projections.
A wonderful
So
discussion to have during the family barbecue.
yeah, exactly. So I don't know. It's just being very conscious around how you get into
Mhm.
it. And for me, it was, you know, learning areas in the community where I could speak to people about real estate through hockey teams, through sports teams. There's lots of places where you can start conversations and meet people.
Mm-hmm.
But much like lots of things in sales, it's, lots of coffee dates, lots of conversations,
Mm-hmm.
building up my repertoire of expertise, doing some on my own initially before I asked other people. So then you have some stories to tell.
Right, right, right. And just before we were recording, I mentioned same thing about private lending. Like my thing is, I generally don't like private lending for myself, but just imagine the conversation: should you have lent to somebody,
Yeah.
and then the deal's going sideways, so you lent to a flipper. Flippers are having real challenges right now, and then the conversation after that, like, hey, where's my money?
Yeah.
Oh, you don't have any money, eh? So I guess I'll be taking the house from you then, huh?
Yeah.
How would your friendship be after that? Right?
Yeah. I mean, it's difficult, right?
Very difficult, especially if it's like
Yeah.
their home. See, like, yeah, I know some people have secured mortgages on on people's principal residence. Oh, I guess your home is now my house, huh?
Yeah.
That's a lovely conversation I do not want to have.
Yeah.
Hence, I stay out of it.
Yeah.
So, Tim, so show's called Truths About Real Estate Investing. Not here to blow smoke up your ass. As I mentioned before we were recording, you are in a position that many people want. The way I phrased it, because I don't want to put words in your mouth, the way I phrased it was you could give up everything that you're doing actively, both work and like you're a realtor, successful realtor. Like you give that up, you could give up anything you're doing actively, and you'd be, I consider, extremely comfortable financially. Would that be right?
Yeah, I mean, that's kind of long been the goal, is to have, I mean, people talk about real estate as passive income. It's not really passive
It's not
income.
passive. No, it's not passive.
I-
Owning Enbridge shares is passive. I'll call that. I'll say that's my baseline for passive. It's very different than being a landlord of one property.
Yeah, I wouldn't say it's always passive mentally, because people get a bit funny about checking stock prices and looking at their portfolio too much. But you don't have to do anything. You don't have to phone anybody or unclog any toilets or anything like that. It's just it just happens on its own. So then it does become a mental game of like, can you detach from having to check it regularly? And we can talk a bit about the market and stuff, and how I used to wake up and, or before I went to bed, I'd be looking at the futures, and then I'd wake up and look at the pre-market, and then look at the post-market and all the stuff in between. So I've kind of evolved from that as well, in terms of just what's comfortable for me. And one of the interesting things I learned was that different people have different tolerance levels for risk, and different people have different tolerance levels for like how much they want to be involved in making money. One thing I remember, this interview I heard on a YouTube video, I think, but this seasoned professional investor basically said, like, the things that make you the most money are not the things that give you the most peace of mind. So choose, what do you want? Most peace of mind or the most money? And it's,
good. I love that.
Yeah.
Peace of mind is inversely related to money making.
Or money making, yeah. So people who want very stable, wake up and know how much money they got all the time, then maybe they're in GICs or very low. I mean, at the moment you're a melting ice cube in that respect because of inflation. But that's the baseline. And then obviously at the high end, you've got things like crypto or very volatile things, or things which, startups or SPACs or whatever that sort of stuff is. So yeah, there's something for everybody. It's just knowing where you want to be and where you want to get to.
I love it, because I was literally talking to a friend who's one of the most successful crypto investors I know. At the dinner table, someone actually asked him, like, what's the price of Ethereum right now? He's like, I actually don't even know. I haven't checked in a month and a half. So even though his investment is highly volatile, he's not checking. He hasn't checked in a month and a half.
Yeah,
it's crazy.
Yeah,
crazy. But your point is actually very healthy. And then I also, before we're recording, we talked about I talked about balance.
Yeah.
Right. But for periods of time, if you want to get ahead in life, you'll have times of complete imbalance.
Yeah.
You've actually laid that out quite a couple times already, and just sharing what you've shared so far.
Yeah, I mean, it's absolutely true in terms of, I mean, if you look at the FIRE movement, or And for people who don't know, that's, financially independent, retire early.
That's you.
I'm not.
Yeah.
Yeah, I mean, I can qualify for that, although I'm not. I still enjoy what I love
Mm-hmm.
real estate as a job, if you will, from a realtor point of view.
Mm-hmm.
But that whole mantra is about, like, in that case, like extreme frugality, maybe, which I haven't necessarily done, but some people do extreme frugality, save loads of money, save 70 or 80% of their income, so that when they're 45 instead of 65, they can choose to stop working. In my case, it wasn't necessarily the extreme frugality route. It was just, doubling down on efforts with regard to investing in real estate. I never, of the net worth I've got, I didn't really create that through my job income, although I had, salaries in the six figures all the time. That money just gets spent. The more you make, the more you spend. It's very hard to stop the creep of a bigger house or a newer car, and all those kinds of things are very counterculture. You have to be very uncommon, as David Goggins would say. You have to be very uncommon to not fall into the trap of trying to kind of grow into income growth.
Mm-hmm.
And so for me, yeah, it was kind of like this very, and we can talk about the brass tacks of it, but the very hard work of building up the real estate portfolio. It doesn't escape me that, like, a huge part of building up my nest egg was on the basis that the real estate market has been trending in the right direction. When I started working with you, it was around 2010. You could have bought any house anywhere and sold it 10 years later and doubled your money, at least, if not more, right? And so, but even then, even back in 2010, we were talking about, right, the people who do best in, that time, real estate, the people who come before us were people who took action. They said, right, this is what we're going to do. We're going to go for it. There's lots of people who came to your sessions and they said, oh, I don't know, and I'm going to think about it. And that's, $250,000 for a single family home that you can rent out for $3,000 a month seems expensive. Yeah. No,
I
it
want
doesn't.
it cheaper.
But yeah. I mean, I remember people talk about it, and it relates to housing and the stock market and everything. It's time in the market, not timing the market, and that remains to be true to this day, because until you actually get some skin in the game and start to work and do stuff, you don't have any exposure to the upside, which will ultimately come back again. I mean, assuming history repeats itself, which it seems to be pretty good at doing. Things continue to go up over time. There's obviously lots of, and we're kind of going through one at the moment, but there's lots of times where things slow down. But, it was COVID, it was the 2008 mortgage crisis. At the moment, we got inflation going on and wars, and there'll always be something. But if you consistently sort of work during that time, then you can build stuff up.
So Tim, you mentioned time in the market.
So
my understanding is you have nothing in the market right now in terms of real estate.
Yeah, and it wasn't. I'd love to say
time the market.
No, I didn't time the market. Like, I didn't have this
apart.
grand design. I didn't have this grand design. For actually, weirdly, a lot of it was just like, if you think about like 10 years from when I started, a lot of it was I signed a 5-year mortgage. It renewed. I signed another 5-year mortgage commitment. And that just came up in the last year or two. And I just thought, do I want to do this again? And this was with no foresight to rising interest rates on mortgages. So do I want to do this again? I looked at the numbers. I was like, this house has done pretty well. I'm just going to sell it and take the money. In many cases, because those houses were in Ontario and I'm not. So I just thought, right, now's a good time to sell. There's no mortgage penalty to just sell this at the moment. And so I just started doing that and kind of putting money in the bank, essentially, with a view to, getting some more ideas. I had a condo in Nanaimo, which did very well, and then, decided to sell that one. And then
so you're homeless now.
So I'm homeless now, yeah. And then the house we lived in, we did some renovations to it. We decided we wanted to live in a different part of town, basically, and have slightly more space. And so again, it was just kind of like, well, the housing market's good time to sell. Let's sell it. Now, some people might think what I'm doing at the moment is a risky move. I don't, because I feel like it gives me maximum flexibility. So I sold all the houses I had, and kind of effectively liquidated all of those, went to cash. and I'm renting my house that I live in now. If I were to buy this house, it would cost about 1.6 million. It's a block away from the ocean. It's a beautiful house. I managed to get I think a reasonable rent price for a couple of years commitment. But I think, and then after, people might say, well, I want certainty. I want to own my primary residence. And great, I don't really care. And
Yeah.
in 2 years' time, when this is up, either I'll extend it or I'll have the beautiful opportunity to experience something new and go and find somewhere else. So,
But you have that
yeah.
flexibility because you're pretty wealthy now.
Well, I don't know about that. But yeah, I took all those, I took the funds that I had from those sales
Mhm.
and then started to look around for like, I'm still with that dream of, the crosshairs on my spreadsheet of my passive income is greater than my expenses. That's all I was really trying to get to. And I use, it's pretty boring and takes a bit of time, but I log every expense that we have as a family into this app on my phone. I categorize it.
What's it called? What's the app called?
Let me just open my phone up. I'll have a quick look. It's just called Spending. Actually, the app's just called Spending, and it's like it looks like a little wallet. But yeah, so I sit down with my wife. We got a budget. This is how much for rent and utilities and kids' sports and going out for dinner and groceries and all that stuff. We have a category for everything. So we know what our budget is. I log all the spending. We sit down every couple of weeks and we say, right, where are we versus X? Oh, we can afford to go out for dinner because we haven't really used that budget enough. Or we're a little bit high on, fill in the blank. We need to figure it out. We've actually got it down to a bit of an art now. But one of the cool things about that app is that it draws a graph for you. So I put in my passive income, I put in my expenses, and the axes have now crossed, meaning that the passive income is higher than the expenses are, which again, back to the FIRE thing, is kind of the definition of being financially independent, because you could stop other sources of income and still pay all your bills. And we actually have quite a high burn rate, if you will, at the moment as a family, because two of my kids are teenagers. They're in loads of sports. We want to travel, and things are life's expensive at the moment, right? So that's kind of I went from having the houses and really wanting to get, my ultimate goal in 2010 when I started all this was like, how do I replace my income? So it's taken me 12 years, but now I've replaced my income, or I've got enough money to pay the bills. And that we can talk more about how I do that. But ultimately, through one of the courses I took with you, which was around options trading, again, talking about the sort of amount of hands-on that I wanted to have, I found that I didn't want to have that much hands-on stuff, but I love the model. I love the model of like generating premium from positions in the market, whether you're selling naked puts or doing covered calls. That concept was something I really enjoyed. So I learned how to do that, and did that for a year, sort of solidly through various ups and downs, and had some sort of moderate success, but it took my time away. And so through that, I then came across some of these funds, ETFs and closed-end funds and various other things, which use a covered call strategy. And most of these are available through, your, Bank of Montreal, for instance, has a bunch of these, and there's various other companies in Canada that do them as well. But they take positions on companies and dividend paying companies, and they sell covered calls on them. Yeah, boring stuff. It's Derek Foster stuff. Is toothpaste and toilet roll, and like we were talking about earlier, Enbridge, all the blue chip stuff basically, and they sell covered calls against those positions, and they manage it, and they pay you a little fee, but the percentage return you get is net of those fees. And yeah, I was opened up to this whole world of, wow, I could just put my money into these, and they're broadly going to track the S&P 500 and the Nasdaq and the Dow Jones and stuff based on what category they're in, but I don't have to think about it, and I don't have to look at it, and it's like this weird magic thing happens where on the 15th of the month they just put money in my account, and I can either buy more shares and DRIP is what they call it, dividend reinvesting program. I can either do that, or I can take the money out and pay my bills with it, or go on holiday, or do whatever I want to do. So I like that. And a lot of the community that I've found through that are people who are already retired. And
like you.
Yeah. And so, yeah. And so, yeah, it's just, I'm like, this is great. I can just keep growing it and putting stuff in. I can take some out.
Uh-huh.
At the moment, I'm not touching it because I'm still doing well with being a realtor and paying the bills that way. But having that peace of mind that knowing I don't have to is worth its weight in gold, because that's what I've been trying to climb that mountain for a long time.
So Tim, you've shared me in private what you've invested. Can you share how much you're getting a month in passive income?
Yeah, I mean, we talked about north of $10,000 a month in passive income. Yeah.
Tim, for the listeners, better for Tim said, Tim and I talked about what he's willing to share, because originally we were going to say 5 figures, but it's too abstract. It could be 90,000, it could be 10,000. Big difference. Which is why we're over 10,000. So
yeah,
it's
let's say 10 to 15 grand a month.
Fantastic.
Yeah.
Thank you, Tim.
There you go.
So over a very tasty 6-figure passive income.
Yeah.
And passive by your standards, which I think you probably have some of the highest standards in terms of passivity, right?
Yeah.
Because lots of real estate investors say apartment buildings are passive.
Yeah. No.
Well, a friend of mine has tenants protesting outside his father-in-law's place of work.
Yeah.
I can't imagine what that is for peace of mind.
No. I mean, because of the apps we use and the technology is amazing now, you can trade stuff on your phone, or again, you can, like with all these brokerages, you can just turn on, the reinvesting program. So when your shares get paid out, whatever your dividend is, $100, it will go and buy you 10 more shares in the company, and that will just rinse and repeat. And by the wonder of compound interest, if you make a 10% return, your money doubles every 7 years, which is absolutely crazy, right? That's just how it works. And so I went to the UK for 3 weeks on holiday, the longest holiday I've had in years. And on the middle week, we went to this little island called Lanzarote, which is owned by the Spanish, I suppose, but off the coast of Northwest Africa. It's in a bit of a weird spot, the Canary Islands. And I remember sat on the lounge one day, and I pulled up the app on my phone. I was like, oh, the dividends just came in, and dropped a few $1,000s in my account. And I was like, no, I'm going to, reinvest that. But it is the sort of passive side of dividends is a beautiful thing, which I know you've talked about before with Derek Foster and some of the companies you can buy directly and get dividends. And then there's these other funds where you can buy the ETF, and because they use covered calls, they get a little enhanced amount of dividend. And
tax
we know,
I'm not an accountant, but yes, tax optimized.
Tax optimized, obviously covered calls and options trading in general is benefits from volatility. So like in the current market we've got, no doubt their premiums are pretty good. So, but yeah, it's kind of one of those, for me, it's like a long-term buy and hold, set it and forget it. I don't need to look at it. You check your account once every couple of weeks, and there's money in there, because it just works. Like they pay when they say they're going to pay. You're not chasing people for rent. Like these are big multinational companies, and they just plop the money in your account. And you don't have to do anything. So I don't know what could be more passive than that. Like I said, the only non-passive part of it is for people who get a little bit in their head about checking their portfolio and what's the portfolio value, and oh my god, the market's down 2% today, so I've lost this much money. Well, no, you haven't, because it's unrealized. So you just, I was reading this book the other day by a guy called Andrew Hallam, and he was basically saying that the best investors in this study, I can't remember who did the study, but the best investors were either dead or they'd lost their login details for their account. And what that means is that human interaction as it relates to tinkering with your portfolio is going to make you do worse, not better. If you're buying like an index fund, like a VFV or something which tracks the S&P 500, you just like buy it and then don't touch it again. Whereas people want to think that they can beat the market or tinker around too much, and they just end up making mistakes. And that's kind of one of the odd things for me as a previous real estate investor. You don't get rewarded really for taking action in trading. In the method that I'm doing it, you get rewarded for patience. You get rewarded for doing nothing. Like just don't touch anything. Just collect the dividends, reinvest them, spend them, do whatever you want. Right. But don't start trading in and out of things because they're having a bad day or a bad week or something.
Yeah. Well, it's a bad year right now, but you're not. It doesn't bother you.
No, I mean actually, like dividend investing is ideal for a bear market, because whilst everybody else is like, oh my God, my portfolio is down 20%. Well, mine might be down a bit, but I'm getting paid every month. So what then when I take that, bunch of money and buy shares, I'm actually buying more shares at a cheaper price because the market's down. So when it eventually recovers, then happy days. Amazing. So actually, I mean, I can't remember the name of the person who said it, but some old wise man said that if you're young and you're still in the building phase of your investment portfolio, you should get down on your hands and knees and pray for a bear market, because it's the best possible opportunity to build wealth. You're not going to build wealth with 2021 highs because you're buying at the top. You want it to be like, I mean, look at the people who bought at the crash of 2020. If you're somebody who bought at the bottom of that valley by some kind of miracle and just sat on it, you'd be double, triple your money or whatever it is.
You're laughing.
So, yeah.
So Tim, I don't know if I told you, but I'm incredibly proud of you.
Oh, thank you. You and my mom.
And I haven't shared this with you, but we're always changing Stock Hacker Academy, but we're doing even more things within it to try to encourage people to have your kind of results, right? Have your I don't know how else to explain it, but yeah, we'll unveil it on November 12th. And just again, understanding your journey, or gave us ideas on things what we should highlight more in the course and spend more time on it. Okay, so for example, Derek's involvement is greater than ever, and also Derek's actually positive on the year, if you can imagine that.
Yeah.
And he's retired 20 years successfully. Yeah. So really happy to, really excited to see, to share with our community the new product that comes out November 12th, that we announced on November 12th.
Yeah.
So actually, you have a podcast around anxiety. You talked about anxiety earlier. Is that part of the reason why you wanted something, an investment that gave maximum peace of mind?
Yeah, absolutely. Like I know my own mind in terms of worrying, and trust me, like I don't look at the news on my phone or on my computer. I don't have Facebook or Instagram on my phone anymore because I realize that those things trigger me as a person. And of course, everybody's different, but I think that, peace of mind is worth for me not having to check those things, and knowing that I could literally go on a silent meditation retreat for 6 months and come back and everything would be fine, makes me feel really good. And there's still things I want to achieve in financial terms and things I want to achieve in life, but I'm sort of acutely aware of the fact that we only have one life in terms of amount of time to spend or put attention on. And at the moment, my kids require a lot of my attention, so it's nice to be able to give it to them. And so, yeah, through my podcast, the Anxiety Podcast, I talk about financial stuff on there sometimes, but yeah, for a style, it's definitely something that fits well with me in terms of not having to be plugged in. Because if you look at CNBC or any of the financial websites, they are, there's red tickers and crazy things going on and flashing lights, and it's designed to make us scared. Like the fear and greed index is a real thing.
And angry, to make you angry.
Yeah.
To trigger you.
And we know that the financial experts are correct 43% of the time. So you'd actually be better off flipping a coin to decide what the future is going to be like than asking a financial expert on TV. So yeah, based on all those things, it's kind of like, what's the point of looking? Like to have somebody's opinion on, whether inflation is going to get better or worse, or the stock market's going to crash worse than ever, or this is the bottom, it's going to bounce and go up. Like it's just all completely irrelevant. If you've got dividend money coming in, you're reinvesting it or spending it. You're in things which are going to be around for the long term. Like you just don't need to. You don't need to engage in that.
Mm-hmm. So I guess you're kind of an expert on anxiety. I'd imagine a lot of people have anxiety due to lack of money. But it's funny, like we have to be able to tolerate a lot of anxiety being professional investors in order to
Yeah.
get to where you are, which is
Yeah.
like no anxiety.
Well, it's
or
still there. I
limited.
mean, you never really escape it completely. I think it's a human emotion. Weirdly, when I started the podcast, I feel like anxiety was a much more stigmatized word. But after the pandemic, everybody seems to relate to it in some way in terms of like uncertainty around the future. But yeah, I think it's definitely finding something that people without a lot of money are more anxious around meeting their basic needs. They might think of retirement as like a luxury they can't get to. But that's just when the work comes in. That's when you just start putting away whatever you can and start building up the snowball however you can and getting it rolling. And if that includes working a bit harder or working on, purchasing a house and getting some appreciation that way, that's the way it goes. Some
Right, so you're
people
not opposed to people taking on more in order to get ahead, but understand you pull back at some point.
Yeah, I think there's times in your life when you need to sprint based on your age and your circumstances. There's things I wouldn't do to get ahead now. I might have done in the past, but people are often talking about, I'm going to take a home equity line of credit. Not quite as good these days because interest rates are bonkers. But people historically might have taken a home equity line of credit, invested it, borrow that at 3%, invest it in something making 10%, and then arbitrage money that way. It's nice not to have to do that. It's just weird being at this stage in my life where it's the first time I've ever not had a mortgage or a car payment or any commitment beyond just basic living expenses. That's probably the best feeling to have, is that I could save money based on what our expenses are at the moment. We just don't need to at the moment. But if I had to sort of tighten the belt a little bit for whatever reason, we could do that. I mean, even with dividend paying stocks, they, in extreme circumstances, they do sometimes reduce the dividend a little bit or stop paying them for a couple of months. But it seems to take there's lots of in a dividend aristocrats, or there's companies have been paying dividends monthly for 50 years. So if you think of everything we've been through, it's going to take quite a lot to upset that apple cart.
If something really bad happened, if like one of our banks stopped paying dividend, we'd probably have bigger problems.
In Canada with our banks and our utilities companies and stuff is extremely strong. And then obviously a lot of these funds will then invest in like the NASDAQ or tech companies as well. Tech companies are obviously at recent all-time lows at the moment. So it's a good time to pick some up. But yeah, that's the other thing about the mindset is that you get into this mindset where you're like, green days are kind of nice in terms of the market because you're like, oh, this is happy and things are going up. And then red days, you're like, well, this is an opportunity to, in a dividend paying stock world, as the price drops, the yield gets higher, assuming the dividend stays the same. So ones where they've, there's a fund in Canada called EIT, which is the Canoe Fund. It's been around since 1997. It pays 10 cents per share per month, and it goes through lots of periods of time where it costs you around $12. So you're going to get 10% for a thing that's been paying out 10% since 1997. Seems pretty good, right? And if you look at what they hold like, Bell Canada and Enbridge,
Johnson.
Yeah, they actually don't have. They're very light on tech actually, which is why they consistently do well. But yeah, they're basically very much in the staples game. Yeah. So that's an example.
It doesn't move much, but because it pays.
Yeah, and again, it's a mindset change from growth investing where you buy Tesla and it goes from 200 to 1,000,
or even buying houses. I'd argue that buying houses is a bit of a growth strategy.
Yeah, the dividend stocks, a lot of them are just like flatline price wise. They go up and down with the
The
turns of
banks
the
have been
market.
whacked. The banks have been whacked lately.
Yeah, but you have to, in order to look at the real return, you got to factor in the dividend return. And if you factor in 10% a year and compound it over time, then they may not make quite as much as the growth model, as in just investing in the S&P 500, but it's pretty close and it's way less stressful. So if you made like 9.5% instead of 10.5%, but there's something psychological about getting paid every month, because we're so cultured to get wages and salaries and all this stuff from our whole lives. Seeing money get dropped into your account every month, for me, it just makes me feel good, versus riding the growth train, which might make you more money in the long term, but it's just a personal preference, right? You can't put a price on mental health and how you feel about things.
Tim, apologies for being nosy, but probably about 2 of our 17 listeners will want to know how much does one need to invest to generate 12 to 10 to 15,000 in passive income a month?
Get a calculator.
However you want to say it.
Well, if you think about
it's over $1 million, right?
Yeah, I mean, if you think about percentage returns, then my portfolio maybe averages 10 or 11%. So you can reverse engineer the math from there. Some of these very safe and steady, I think EIT is like, pretty much a golden goose as it relates to the type of thing I'm talking about. The canoe fund is a great example, but if you buy at the right time, like I did, it pays 10%. And a lot of people would think that's like a lot of old school people would think 10% is a very aggressive, great return. The other beautiful thing about dividends, depending on your province, is they're taxed extremely efficiently. If you live in Ontario or British Columbia, for instance, you can make like 100 grand of eligible dividend income and pay quite a small amount of tax on it as it relates to employment income. So there's things like that as well. And if you're sharing it with your spouse, and there's all sorts of other cool stuff to check out. But yeah, if you could build a portfolio around 10%, then there's lots of opportunities to do that with things which will consistently pay out. There's also ones that pay out 15% and 20%, and
it's getting aggressive.
Yeah, it's getting aggressive.
I get scared
then. Yeah, there are some crypto ones which are a bit newer, and they'll pay a dividend, and you also hold crypto as well. And they've, I bought some of those. They've dropped a bit and they reduced the dividend, but you just sit on it and wait, and that will go through its own evolutionary cycle and come back.
Right. And folks, none of this is financial advice.
No. Not financial advice. And as we talked about earlier, like there's things I've done in my investing career where I've done some mortgage lending and it hasn't worked out and I've lost money. Not everything is not everything you think is going to be the holy grail in terms of getting that passive income goes completely your way. But I just I just set it to the side as a learning experience and move on and try and find something else. And the way I'm doing at the moment may change and may alter as well. It's just based on the world and the ability to make money. I think investing in large companies that have been around for decades and decades seems to be a pretty steady road to just build things up. So
my stock hacking follows this very similar model to the funds that you're investing in. Boring stocks, sell covered calls. And I'm trying to target like 10% returns, but that 10% is much better tax wise than versus people who are lending for 10%. Like knowing what you know now, would you ever lend your money again?
No,
especially at your tax rate.
Yeah, no, but it's also just because for peace of mind. Like I just don't need to. I don't need to do that. I don't want to be. I don't want anybody phoning me up. I don't have to phone anybody else up. I mean, that's. It's
you control your money. Like, you can push buttons and it'll be cash in your bank account.
Yeah, and like I said, I don't do the when I first started, I did the drip thing, which is just that as soon as you get paid out X amount of shares, it'll buy as many as it can that you got paid in a dividend in the same company. Now I get it all paid in cash, and then I just sit there and look at my portfolio and say, right, where do I want to top up percentages to make sure I have it's kind of like diversity within diversity, because the funds themselves hold a bunch of companies. Some of the funds hold a bunch of other funds inside them, so they're it's pretty
extremely
well
diversified.
yeah. And then I'm diversifying myself in terms of like, I like to have, not too much with any one particular provider, and kind of spread it out that way. So yeah, I don't foresee any large changes. There are people, and I know of people who in the where we're at the moment, they say, right, when real estate comes down again, they're going to get aggressive and start buying a bunch of properties. I don't want to do that, because I like the easy life, to be honest, and I just like the peace of mind is more valuable to me than trying to double my money again. Again, as we talked about earlier, I'm still working and bringing revenue in. So at the moment, I'm just reinvesting my dividends anyway. So it is continuing to grow just by virtue of leaving it alone.
So again, I have the benefit of having private conversations from you, but you have the option to work as much as you want and not work as much as you want, right?
Yeah. I'm a realtor, so I can, during the 2 years of the pandemic, I was extremely busy, like a lot of realtors, and I built up a really nice base of clients. So now I just spend a lot of time taking care of them and following up with them and making sure they're, taken care of and catching up with them. And, it's, I feel very fortunate with the job because it's a lot of popping around to see people for a cup of tea or going out for a coffee or something. And yeah, I built my realtor business through prospecting like crazy as well. So it's the same kind of model where I spent I'd sit down for 3 hours a day in front of my computer. I would run Google ads and I would just cold call and phone people, and I'd pull up lists from phone numbers from the internet, and I would go and knock on people's doors of their houses and just hustle hard 7 days a week for 18 months to build up a bit of a base. And then it's kind of like, like all these things, it's kind of like launching a rocket or taking an airplane taking off. Most of your fuel is used to get started, and then once you're started, it's like, right, now I can some days only work for a few hours because I'm just going to phone a few key customers, maybe have a meeting, and then I'm like, that's good, it's fine. Now historically I would have beaten myself up and said, you need to do 8 hours, because at some point somebody in history said 9 to 5 Monday to Friday, that's the industrial thing to do. But now with the passive income working for me as well, I just think that, if I've got the opportunity to hang out with the kids, or, sometimes I just stop at lunchtime and I go and work out in my gym, and that's good. I'm invested in myself then, which is important. So I love the freedom that it gives me to do those sorts of things. And I just feel very fortunate that I started in the moment in history when I did. And it worked out well. But I have lots of stories about opportunities I missed out on. I worked for a tech company in my younger years that ended up getting acquired, and it turns out I left like 8 months before they got acquired, and lost all my share options, which again would have been a nice big chunk of money. So, not everything works out, but I think if you keep trying and putting the effort in, then you kind of get there. So
amazing.
Yeah.
All right, Tim, we're over time. Can I ask you any final thoughts you want to share?
I think the thing that I'm sort of most conscious of at the moment is just how we spend time in our lives, and making sure you invest in the things which are really important to you. And if you're at the stage where you're still in the accumulation phase, and that's, listening to podcasts, reading books, getting involved in communities where people are aggressively learning skills and trying to do things, I think is a great place to spend it. That's where I did. And as I said to you offline before we started recording, I've always been the kind of person where I'm like, right, real estate investing, student rentals, let's go. And I'll just like read all the books and take all the courses and meet all the people. And, just, I don't know what it is, my competitive upbringing, but I'm just like, I want to learn as much as I possibly can to exploit this opportunity.
You were a competitive hockey player, right? So
yeah, exactly.
History of being competitive.
Yeah. And then I get, I conquer that thing, whatever it happens to be. And I get there and I think, I'm going to do something different. So get stuck in and don't be afraid to change. I've gone from working in sales for a tech company. Then I started the anxiety podcast. I started coaching people, life coach style stuff. Didn't quite jive with that. So I kept the podcast, but went back to work for a real estate company. Then I became a realtor. And so lots of my friends are like, you're all over the place. And I'm like, well, yeah, because I'm trying to improve my life. And I'm not going to be satisfied with just, this isn't it. And I'm not just going to do this to get a pension. I'm going to change. So
amazing.
Don't be afraid to change.
Pretty cool. Don't be afraid to change. Tim, thanks so much for doing this. Thank you for being so open and honest. Showcase culture is better real estate investing. That's why I asked you on. And again, I'm so proud of your success.
Yeah, thank you. I attribute a lot of it to relationships like ours, where we've just been continuing to keep in touch, and all the help you gave me at the start. And yeah, it's been good so far.
Amazing. All right, thank you again.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. The link is also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.